Good morning. Welcome to Market Monday for October 20th, 2025. Are you not entertained? Haven't we been talking about just how quiet markets have been lately? 33 days in a row without a 1% move in the S&P 500 stock market. While there have been much longer streaks, 33 days is fairly high, especially when looking at the past 25 years. But we expected this, didn't we? Chad read that quip from Mark Twain just a few weeks ago. What did he say again?
Mark Twain famously quipped, "October, this is one of the peculiarly dangerous months to speculate in stocks. The others are July, January, September."
We get the joke, but he started with October for a reason. October's had more 1% moves than any other month. Of course, this data going back to 1928. And would you believe it? Just that one day sneeze was enough to bring the bears out in force again. Here's each of the past 4 weeks, so you can see the trend even starting to get more bullish and less bearish. Then one swift down day in the market, and we're back to more bears than bulls. But remember, all these bears we've been talking about over the years have been so amidst an ongoing bull market. In fact, last week, the bull market turned 3 years old, of course, beginning on October 12th, 2022. A few weeks ago, we looked at year 4 of bull markets. Now remember, there have only been 9, and that's probably not enough instances to be a reliable indicator. But history is history, and it appears year 3 this year was better than average, which is usually flattish. And historically, we see year 4 is still pretty good. Did year 3 pull some of that forward with the AI hype? Time will tell. Here's another look at bull markets year by year. Year 1 the strongest, not surprising. Here's year 3, which we just completed. Again, this year 3, of course, being much higher. Year 4, which started last week. But look at year 5 and 6, should we get there. And that's the point. Bull markets can last a lot longer than we think. Here are 6 bull markets since 1950 that made it past its 3rd birthday. Here's December of '87 through dot-com crash in 2000. Here's bottom of global financial crisis to COVID. In fact, no bull market in the past 50 years, if it lasted beyond its 3rd birthday, didn't go on for at least another 2 years. Say it with me, no guarantees, just history. Speaking of AI hype, whether it's a bubble or not is a conversation, a very nuanced conversation for another day. For now, it certainly does appear to be contributing to GDP economic growth. Here's the past 4 years of GDP with the contribution of AI investment and all other components. And here's the percentage of AI investment down here. Here's probably some post-COVID normalization here. So while it's not fair to say AI investment is single-handedly propping up the economy, it's certainly helping maintain a reasonably healthy level of economic growth despite all other areas declining. And today, we'll leave you with, here are the founders of YouTube in the very early days when it only had a few dozen videos, light years away from where we are today. So perhaps even though AI is far more sophisticated today compared to where early technologies like YouTube were in their infancy, perhaps we still can't even fathom what will come from AI in the years and decades ahead. Have a great week.
Videos are just going to be just as large. I mean,
Well, I was getting pretty depressed towards the end of last week. And I was like, dude, we have maybe 40, 50, 60 videos on the site. but I'm not. It's like I'm thinking, okay, so if I'm actually a user of this site, I'd be gone in like 4 videos because there's just not that many videos I want to watch. Like videos like this. Like, yeah, you never watch it. It's gonna be like people
I'm not gonna put this up.
This is lame.